All righty, welcome back to the Smart Investing Show. I'm Brent Wilsey, and with me now, is obviously Chase still with us, but now stepping into the studio is Harrison Johnson, our financial planner, CFP. Harrison, thanks for being here today.
Always good to be here.
And we're talking about, I like this one, the real cost of financial mistakes. I think this could be a very big number, if I'm not mistaken.
Well, in this case, I don't have an actual dollar amount. I wanted to more talk conceptually about it because, everyone wants to make the right financial decision, obviously, but sometimes it's more important to avoid making the wrong decision, avoid making mistakes because, the value of mistakes add up and compound over time. And I would say, the definition of a mistake financially would be choosing from a set of alternatives one that doesn't create as much output as another. Right. So that doesn't necessarily mean a decision is causing you to lose money. Maybe it's a decision where you're just not making as much money as another option that you had available. And this can be a broad, number of things like not taking retirement withdrawals and structuring income in retirement, and that causes you to pay more taxes and IRMA premiums. Maybe have too much cash, so you're not letting that cash work for you, or maybe you have, too risky of investments, and you're putting yourself out there where you could lose and then not make that money back, or a lot of people make decisions based on their emotion and selling at a bad time during a downturn, or chasing hot trends and that causing you to lose money in the long run, or not making the right decisions when you structure mortgages. All of these, whether it's assets, debt, cash flow, taxes, they all have an impact on you. And if you're not making the right decision, you're just making your life more difficult on yourself, which no one wants to do.
No, and as a fee-based financial planner, you're not selling product, not selling annuities or insurance or anything else. I mean, you're looking at these things for your clients, and you can actually question them unbiasedly because of the fact that you see something that's kind of risky, they're going to do something kind of risky, saying, I don't know, there's no benefit for you saying yes or no, other than you being paid a fee to give them the best advice.
Yeah, I'm perfectly positioned to tell people, this is what to do, and also these are the things not to do, and here's why. Because you're right, I don't have bias one way or another. How somebody structures a mortgage makes no difference to me. How somebody takes withdrawals from different accounts makes no difference to me. So I can truly look at the impact and say, this is the right way of going about doing it. And, the value of that decision plus the value of that decision plus the value of that decision, it all adds up. And if we can just be smarter, it makes life a whole lot easier because we're getting our assets to work for us better. We're avoiding, the costs and extra taxes and opportunity cost of making not the right decision.
I would say, too, the nice thing with financial planning in a lot of cases is you kind of talk about structuring a mortgage, right? It's very black and white on the numbers. Like, you do it this way, this is the cost. Where I bring that up because investing, there's always an infinite possibilities of opportunity cost, right? It's like, oh, well, if you would have bought NVIDIA and put everything into it, technically that is an opportunity cost. And I just bring that up because investing, there are so many question marks. And that's what we try and do, obviously, is reduce risk as much as we can as possible. But with your situation, there's a lot of mistakes that people make that are extremely unavoidable. And if you just look at the numbers, again, they're black and white, you can really prevent a lot of mistakes, even outside of the investment landscape where things are, I'm going to say, a little bit grayer because there are a lot more uncertainty in terms of what the numbers will be.
And the financial planning impact or piece of that investing puzzle is, well, how much money should you be investing of the assets that you have? How much cash should you be holding of the cash that you have? Where should that be so it's at least earning something? Of the money that you're going to be investing, what types of accounts are you going to be investing into? When you're withdrawing money, which of those accounts are you going to access? What is the timing of doing all of that? What are the amounts that you're going to be doing all of that? How much? What should that, we don't like the term asset allocation and as far as, your portfolio, stocks, bonds, whatever. It's more of, well, how much can you set aside to be invested? How much should you set aside for these upcoming purchases that you have? How much cash do you need in reserves? Or like we talked about last week, having a plan of, how to access cash and things like that. So again, the value of avoiding mistakes is so large, and a lot of people don't understand what it is. Oh, well, it looks like last year I had to pay some extra money on my taxes. Well, you don't know that you actually made a mistake because there could have been something that you structured better. You just weren't aware of it.
Yeah, and these are all things that, again, people can talk to you about and not just the first time. Because I know many times people do a financial plan, that's it, they never see or hear about it again. You're a fee-based planner, so they can do things, and 6 months later, a year later, Harrison, need to meet with you, or what do you think about this? Just a phone call. I mean, these are things that can really keep people from making these mistakes that cost them money long term. Because if you meet with somebody once, they'll never hear it again. With you, they're going to hear it over and over again.
And I mean, our lives are dynamic. The world around us is dynamic. Everything is changing all the time. So financial planning is really about putting you in a position to handle and make the right decisions as they come. And, as you go through life, you're going to come up with opportunities. You want to make sure you're taking advantage of the right opportunities, avoiding mistakes. And if you do that consistently, finances isn't something that you should have to worry about. There's plenty of other things to worry about in life. But, if we can make sure that your money is not something you have to worry about, that's really what my job is.
And I've heard people say, I feel so much better because Harrison's on my team now. I don't have to worry about things that I didn't know about because you know about them.
And I mean, I get that a lot. That's why my meetings take so long when I'm presenting something. I'm in there for hours because, there's so much to go through. And it'd be very easy if I just said, okay, do these things, but it's do these things and here's why. The why takes a long time to explain, but, that gives people the comfort knowing that they really are making the right decisions. Because again, I don't have bias one way or the other.
Yeah. And that's so important, the why, because if you tell somebody something like, oh yeah, they'll forget about it a week later.
Yeah.
But if you tell them the why and explain like, oh, that makes sense, I believe they'll be smarter financially because you explain that to them, you educate them, and they know you're always there for them.
Or to compound on that, explaining the why right when I do it, they might not understand exactly how the numbers work, but when I'm explaining it, it makes sense. So that means when that problem or that issue comes up, they know they can always clarify it with me. Or if something else happens, well, what do you think about this? Well, let's handle that new challenge and make sure that you're handling it appropriately.
Great. Well, Harrison, thank you very much. Appreciate the input there and the smart topics as always.
All right. Thanks, guys.